Hi guys, welcome to 100x powered by Cume.io, the fastest crypto derivatives exchange. My name is Nikita Sachdev and you're watching Opening Bell, your wake-up call to all future happenings in the global crypto and traditional markets. Let's begin. Starting off with Bitcoin, both crypto and financial markets have registered huge decline in their volatility indices over the last couple of weeks. Although traditional markets are still more volatile than pre-pandemic levels, 10-day realized volatility of Bitcoin is at its lowest level since April. We expect Bitcoin to make recovery once momentum picks up. On the other hand though, Bitcoin and S&P 500's one-month correlation just hit a record high of 66.2%. And we expect Bitcoin to recover a bit this week to find support around the $9,200 price levels. Let's talk about the Indo-China tension. In the aftermath of the border clash in Ladakh, India has moved to ban 59 apps from various Chinese companies, which include social media giant TikTok. This is a huge blow to Chinese digital companies, as India was the biggest market for many of these apps. Also, China has been devastated by the ongoing pandemic, and with the IMF estimates of China's growth at around 1.2% this year, and their export markets taking the worst hit in a long time, this conflict will be highly damaging to China in this recessionary environment. Let's move on to India. The biggest news from the Indian markets this week has been about Reliance Jio, a subsidiary of Jio Platforms, which has raised almost 19 billion rupees from Intel. Intel now has a 0.39% stake in the company, and Facebook has around 10%. This is in addition to the slew of investments in Jio since April, and with the total now standing at more than $15 billion worth of investments. Let's talk about the lack of V-shaped economic recovery. Just a few weeks ago, the world's markets were recovering at an astonishing rate. But since then, markets worldwide have ended up in weekly losses, and crypto markets have been pretty much stagnant. Last week was no exception. The Economic Activity Index seems to have slowed down in the recovery phase in the US. The US trade deficit is at its widest gap since 2018, mounting up to around $55 billion adjusted seasonally. FTSE 100, Hang Seng Index are all showing similar trends. This isn't necessarily bad though, since nobody really wants markets on steroids riding on speculation alone. Besides, the closer the markets are to economic reality, the lesser the chances of a big market crash. And that's all for this episode of 100x. We'll be back next Sunday with more market news. And if you don't want to miss a thing, subscribe to our YouTube channel and follow me on Twitter. Have a great week ahead, everyone.